Hello everyone, welcome back to the channel. If you're new, welcome, and if you are a returning subscriber, thank y'all so much for coming back. I do appreciate it. So I'm both recording, so you're going to see the same outfit, but I wanted to answer a question that I got that I really do like, and I'm going to talk about it today. You already saw the thumbnail, but before we get into the video, as always, I'm not a financial advisor or guru or fiduciary. I am a regular investor just like you. I am someone who is in the trenches. I just happen to make YouTube videos documenting our journey, okay? And hopefully inspiring you, like trying to take a lot of the fear out of investing and, helping you guys to see that just with small, simple, practical steps, it can work for anyone. So let's get into it. So how can you build $100,000 portfolio or dividend portfolio? Like how do you build it? Like what are some tips and tidbits? Now I was thinking at first like, oh, I can go here, I can pull up this spreadsheet, and then I can pull up this article, then I can pull up this chart. And I was like, no, back it all the way up. I think one of the things that, we don't do enough of nowadays is just have a conversation, right? So what can we actually do? So I'm hoping that me doing this in a very conversational style is, resonates more than having a bunch of graphs. I think if we go online and we type it in Google, they'll give us a bunch of graphs and videos and interviews and charts versus just sitting down with somebody. And I'm hoping, you consider me your friend and just talk about, how to get there because we've gone that route. Okay. So if you see me looking down, it's because I have a little index card here to keep me on track. You're going to see some things up on your screen. So if you're trying to build $100,000 portfolio, one of the reasons why most people fail at doing this is because they have the wrong expectations going into this. $100,000 takes time to build. One of the things that Charlie Munger, who is, passed away, but one of his most famous quotes is that getting to $100,000 is, I'm not going to say the actual word, but it's a beast. Okay. It's a beast. It takes a lot of sacrifice. It takes time. It takes effort. But once you get there, once you hit that mark, you are going to see compound interest move in a way you never experienced it ever before. And when I started on this journey 10 years ago now, one of the things I had to learn, and this was the first point that I want to talk to you guys about, is your why. Why do you want it? Like, are you trying to get rich quick? Do you have the proper perspective? Maybe you're on the other side, you want to maybe have, start your nest egg. Maybe you want to perhaps take a sabbatical or retire. Like, why do you want this? Because if you have a why, that's going to keep the fire when this journey starts to get tough. Because let me tell you, the market don't always go up, and you need to have a why to keep you kind of motivated when your portfolio is crashing down in the pits. Okay, we see all the returns happening now. Who was there with me in 2022? Who was there with me at the first half of 2023? It was not pretty. It was ugly. It was very bad in the market. I was making videos down 18,000, down 20,000, down 10,000. That sucks. But the fact is, when you remember your why and you have the proper understanding, that is going to help you build. And let me tell you, when the market is red, your good companies and your good funds are on sale. So remember that. The second way to build up a $100,000 portfolio is to sacrifice, aka budget in parentheses. But every time we say the B word, that's kind of budget, it kind of deters people. But here's the thing, your job, like the job you go to every day to work, they operate off of a budget. That's how they know to pay you your paychecks every month. Corporations, billion, trillion dollar corporations, the government, well, and the asterisks, we need to operate on the budget. Everybody operates on one. And I think sometimes we go in thinking it's a bad thing. Like, I can't do this. I can't go here. I can't have that. But your budget is on your side. Your budget is, your ride or die when it comes to your finances. It's team you. It's not meant to kind of make you feel like you can't do anything, but rather it's telling you, listen, if you want to achieve your goals that you had set out all the way back in January, it's March now, this is what you need to do. You can still budget for fun or self-care, but you have to make a sacrifice. Anybody on this journey, and I have a lot of my investy besties who have 1,000 shares of SCHD, 2,000 shares of VTI, this and that, they will tell you they had to make a sacrifice. They had to prioritize that goal of building their share sizes to get their dividend up. Could we have gone out to buy a bunch of purses and go out to eat every day and get coffee and all of that? Absolutely, right? We work hard for our money. We feel like we deserve it. But one of the things I'm learning as I'm getting older, and maybe this is just maturity, but the quality of what I'm spending my money on is diminishing, especially when it comes to eating out, right? Like McDonald's, for example, back in the day when you got the value menu, y'all remember the value menu? I don't even know if that's out. Or the dollar menu, you felt like, okay, the quality matched what I was spending. I was spending $3, $4, but I got, a McDouble, and I got a small fry and a sweet tea, which I really do like their sweet teas. So I felt like, okay, it wasn't the best, but I wasn't spending a whole lot. Have you been to McDonald's lately? I took the kids to McDonald's, and we don't get anything fancy. I think the kids I get the chicken nugget Happy Meals for some of the kids, and then I'll get, my daughter would want the 10 or 20 piece nuggets or whatever it was. I just know when I went to the window, the man said it was $30. I said, for chicken nuggets? I mean, I get it, but that's expensive to me. So again, it's about making a sacrifice and really asking yourself what's important to you. I'm getting older. Lord willing, I will be 40 this year. It has to come to a point where we start denying this for this. You have to make a choice, right? This is something I'm teaching my children. You can't have everything. You make an educated choice, a responsible choice. You tell yourself, you know what? Maybe I can't have this now. But if I do the work here, it'll pay for me to have that without me having to worry about it. The third thing is that you have to keep it simple. A lot of times, because I did this, when I first started trying to build up the portfolio, I was stretched too thin, okay? It was like putting a little bit of butter on 5 pieces of toast. It's just not going to work. You might as well just wrap it up and put it away. But sometimes it's best to just keep it simple, right? 1 or 2 or 3. I usually say 1 to 5, but I was more so 1 to 3. Index funds that you may like, or stocks, and just focus on building your shares up there. If you're spread too thin with 50 and 75, 80 different stocks and funds, you're going to see that you're not growing as fast as you can. However, if you pick a little bit and you build up your share sizes, once you meet those goals, you can then move on to something else. And while you moved on to something else, you got those nice beefy dividends paying you from your initial investments. So you don't have to feel pressured to have so many different investments when you're first trying to build up this portfolio. And you want to make sure you believe in what you buy, especially in the age of social media, and you're watching a lot of content, you're reading, you're watching interviews, you're on all of the different platforms. Everyone is telling you to buy this, invest in this, or they'll change their mind next week and say, no, this is not good, buy this, invest in that. And you're all over, you're pulled back and forth. You don't know which direction to go in, which is why research is so important. And also transparency. That's why I actually show the account, because investing is not a game. This is something really serious that we work hard, we work hard for this money. So we put the money to work for us and we expect a return. So keep it simple. You don't have to stretch yourself too thin. Find something you like. If you just want one and done, you just want VOO or VTI and that's it, that is fine as well, okay? The fourth thing is be consistent. You have to build consistently. You want $100,000? Break it down and say, you know what? My first goal is to get to $500. $500. So many of you have told me, I love when I read your comments, that you just bought your first share in this, or you reached 10 shares here, or you reached 20 shares in there. And those shares equal a dollar amount. And you'll realize, oh my goodness, I have my first $500 already invested. I have my first $1,000 invested. And that's just with, let's say, a Roth or a taxable account. That's not including like a 401k or a 403b. So it's so important to invest and build consistently, especially because you get a tax incentive when you're talking about your employer sponsored account. So that's a plus right there, but you want to be consistent. You don't want to, if you can help it, like start, stop. Even if you're being consistent with $1 or $2. Just be consistent. I hear people tell me all the time, oh, I had this much left from a bill, so I just put that $23 in the market. That is the consistency I'm talking about. But to get to 100,000, you have to be consistent with getting to $100 first. And that's why I have this channel. I make the same type of videos all the time, and I do it because I need that consistency. I need that habit built into me. That is a way you can get to a $100,000 portfolio. And finally, and last but not least, turn on the drip. You want to see compound interest really work for you. You want to see your portfolio grow a little bit quicker. Turn on the drip, okay? Now, again, you got to go in your settings to whatever app you're using and manually turn it on. But once you do, any dividend you get paid will get reinvested back into the position, which will grow your share size. So when it pays out again, your dividend is a little bit bigger. And what you'll see over time is that your dividends is going to increase at a substantial rate. You don't have to worry about trying to manually go back in. Once you turn that drip on, it'll automatically do it. Sometimes you may be busy with life. You get sick, you have important tasks to do at work, you may be planning a wedding or something like that. So the platform will do it for you. And I believe our platforms does it, like Robinhood, for example. They will tell you, oh, your dividend was reinvested. So I'll forget because, I have a busy life. So I love getting those alerts because it's like, okay, the platform is doing its job. But you want to get to $100,000? Turn on that drip. Let compound interest help you. Okay, so you are helping you, but compound interest is helping you as well. And then a bonus tip is use any extra money. It is tax time. It's tax time. So if you are getting a tax refund, or I know this time of the year, a lot of people are getting their bonuses. So like the year end bonuses from last year, they're getting like in the first quarter or second quarter of this year. Perhaps you're up for a raise. Those are all great opportunities to invest more to get you to your 100K portfolio goal. You're not going to miss it. Let me tell you. If you turn your 401k percentage up a percent or two, trust me, you're not going to miss it. If you invest an extra $50 or $100 a month, you're not going to miss it. And automate these things so you don't have to manually go into the system and like, oh, wait a minute, did I do this? Did I do that? The system will do it for you. All you got to do is just set it up once and that's it. So those are just some of the ways that you can use to get to a $100,000 portfolio. I hope that you guys like this video. Those are some ways that helped my husband and myself. And I'm hoping that if we take this information to heart and we actually implement it, it's going to be a bunch of us with portfolios that exceed the six-figure mark. Again, guys, thank you so much for watching. Please leave me a comment down below. Do you agree with which one of these do you like? The tips that I shared, which one do you like the most? Or do you have an extra tip to add so we can help our beginner investors as they are getting started on this journey? Thank you guys so much for watching. And until next time, you already know, I'll see you in the next one. Bye-bye.